It didn't start on its phone, so.
Okay, do I have to start over with the
No,
roll call?
no,
Okay, so I'll just start over, the recording started. I'm just going over the agenda. There'll be approval of minutes from the last audit committee meeting, which was November 28th, 2023. Review of a couple of years of audit results, fiscal year 24 and fiscal year 25, and financial statements with our auditors. A discussion of any audit areas of specific emphasis for the coming fiscal year 26, which just ended, and then adjourn. Now, for the approval of minutes, has everyone gotten the minutes? Because I only could get them when I was here. I didn't see them.
They were in an email.
Okay, in the note. So I was not present in 2023. Does anyone have anything who was present to add or change?
Thank you, Mark and Steve were present and
Anything
online.
Yeah, Tom and I were both here as well, I believe.
Yeah, Sean Brandt, yeah. So I think you're the only one and you and Karen actually.
So I will abstain when we discuss them, but does anyone want to make a motion?
Motion to approve the minutes.
So I have a question or comment, and maybe Karen, you can fill me in. I know that there was conversation at the last meeting. We had some conversation regarding a town review of the financials associated with Burbank ice rink. And there was some conversation about whether we were talking about where the auditors should, do some deep dives in the coming year, whether that was appropriate for them to do that. And you have some back and forth, and there were varying opinions on that. And I thought we came out of that conversation with a sort of a halfway point where we were going to have the town financial organization take a look at those numbers, or at least collect that information.
We do get it from
Okay.
them when
And you do, so you have been receiving that, because I don't see that in the minutes anywhere. I just wanted to.
Oh, I didn't mention it in the
You
minutes.
didn't go pick up on this.
I do recall you mentioning it now that you say it.
I also recall we
Can
said
I
that
just
it wasn't
understand, so
necessary because it's
Burbank is a
independently
private-
audited.
Okay, go ahead.
Yeah, they're independently audited.
Independently audited, so it wasn't necessary for us to be looking at them. And we got
That's
the,
what I was gonna guess, because they're not part of the town.
However, the lease that they have with the town does give the town the right to review their books on a regular basis. So there's some discussion as to that had actually never been done, and as to whether it was appropriate, while we had the right people on hand, to have them take a look at that and give us their opinion on how those books are being managed. So we can deal with that down the road. But
Okay.
that was the conversation we had at that time.
Can I ask a
yeah,
question?
and the
How does
auditors at
that
the time said it was not necessary as well, Steve, right? We had the conversation. We all said that it has an independent audit.
That's
It's not
that's
necessary.
actually not what we agreed to, Tom. What we agreed to is
It
that
is.
there was some conversation at that time that it was something that was kind of a black box for us, and we wanted the opportunity to look at those numbers, which we still haven't really seen.
So my memory of it was that Sharon said that you get the audited financials.
I'm so proud of the year, but at the time I didn't have them for that year. And
Yeah,
I
but you
requested.
said you got it. So, we asked the auditors to look at, one or two things. So when that came up, we said we don't need to. So we agreed not to. You guys have probably comment. I can't remember exactly what we said to look at.
I'm impressed that you guys remember.
Yeah, so am I. It's
I do recall when I was going through the minutes, like we had the minutes that Zoom does, and it was probably just not notated in the final minutes. Like we kind of, most of it's the major discussion of what we were talking about related to the financials. So I must have chosen not to put them in because they are pretty extensive. The minutes can be, so I must have opted not to show, but I do remember reading through it. Because it picks up absolutely everything that is said. So I definitely have information regarding it. If you want, I can actually add it to the minutes.
I would just add a note to that effect.
Okay.
So I'm just curious, who pays the cost of this audit, and who pays the cost of the Burbank audit? How is that funded?
Well, the audit of the town is paid by our budget, and Burbank pays for their own audit.
But if we're asking for an independent audit, like asking, say, another organization other than the people that are auditing,
We'd have to pay if we wanted our if we wanted them to do an audit of Burbank.
And what does that cost?
Should we talk about that under item 3, discussion of audit areas of specific, because I do have questions as well, but I know we're just.
Yeah, this
working on
is
the
the
meeting
minutes,
minutes, right?
Yeah.
I'm just talking about the impact of the minutes.
But yeah, I'd love to have a little more.
It was brought up in that meeting. I think that's why he brought it up
All
now.
right, so then we're not gonna approve the minutes because they're incomplete.
We can approve them as amended. Like we can
We just
agree
don't-
on amendment.
we just
Where does,
add a note to that effect.
I'll put the notation in. I have all the notes of what was said, so it's not a problem. I just probably didn't think it was, like I was trying to summarize them down to a level that, was, not 20 pages. So I can add it.
okay, so then, do we have,
I would make a motion to approve the minutes with that money amendment.
What's the amendment?
What's the amendment? Yeah.
That we were going to reach out, because at the time of the meeting, we had not received their audited financials yet. So I said I would reach out and get them and make sure we got them going forward. They tend to be later than what gets talked about in the lease about when we should be receiving them, but our audits have been late too. So I haven't really been judgmental on how long it takes for us to get them, because a lot of these audit firms are, really out straight. So I haven't really been holding it against them or anything like that, but we do get them each year. It's just sometimes not in the timeline that's actually mentioned in the lease agreement. It's a little later.
Understood.
so the addition is at the time of the 23 meeting, at least one audit committee member wanted further information on
Because we had
the
talked
audit
about
of Burbank. And
Yeah.
just like some statement.
because
like that.
they're audited by a third party. They're audited by a different.
Is it that or just Sharon will
Or
reach out to get our copy of
I
it?
gotta
We get the.
We decided that would be
Audit,
suffice for me to get it, yeah.
So I would say that's it, just that she'll reach out to get a copy of the audited financials.
And you got them. Great job. In the next 2 years.
I know.
So the motion to approve the minutes with that one amendment,
Which I made.
second.
Then you can second it.
Yeah, second.
Second. All right, I'll take a roll call on that then, I guess. Sean,
Yes.
Tom,
Yes.
Karen,
Yes.
Mark,
Yes.
Steve,
Steve, yes, I'm sorry. And Mary Ann abstain.
Yeah.
There.
Karen probably should have abstained.
It doesn't matter. Meeting minutes, you can.
You can, she can approve.
Oh,
You
okay.
can as well. You
It's
don't
a,
have to
it's a
abstain.
choice if you,
Yeah.
if you
I'll
don't feel
still- I'll still
comfortable.
abstain
I read them.
because
They're
wasn't there.
Yeah. Straightforward. Good
Yeah.
job.
Thanks.
Okay, so I guess now getting past the minutes. Next, we can start with the review of the fiscal year 24 and 25 audit results. And
Then
then
you turn it over to, is it gonna be Scott?
Gonna be me to begin with. I recognize most people here. My name is Scott McIntyre. I've been the partner on the audit here in Reading for many, many years. I was at the RMLD Audit Committee meeting, I think it was about 3 or 4 months ago, with the audit manager for that engagement. I'll introduce two people to my right, Zach Nolan, the audit manager for the town portion of our audit. And to my right is Laura Stone. I've asked Laura Stone to come to this meeting. One, I wanted to introduce her to Sharon and also to do a little bit of the committee, what these meetings are like. Laura is going to be taking over as the partner on the Town of Reading audit with the June 30, 2026 engagement. I am going to be retiring at the end of the summer, so we've worked a transition plan in here to bring Laura in to meet the folks here in the Town of Reading and to take off where I leave the firm in about a month from now. As has been said a couple of times, I don't think this committee met roughly a year ago to go through the 24 audit. I can assure you that if there were audit issues that, in our professional opinion, needed to be brought to the attention of the committee, we would have somehow, I'm not sure what I would have done, but I certainly would have done something to see the meeting get called, to have the proper communication should there have been any issues with the audit. There was none, and I'm also very happy to report that with the completion of the 2025 audit, it's a similar type report that I know there are some new members of the committee, but a very similar type report tonight that you've received in the past. And Zach's going to walk through some of the highlights in the number pages as well. But our opinion on your financial statements is what is known as an unmodified opinions, clean. Some people refer to it as clean. In other words, based on the audit work we conducted and performed in accordance with generally accepted auditing standards and generally accepted government auditing standards. Following those standards, in our opinion, your financial statements are materially fairly presented in accordance with GAAP or generally accepted accounting principles. So, Zach, as I mentioned, is going to walk through some of the details. We did issue also what I would refer to as a yellow book letter. It's kind of old terminology. I mentioned the auditing standards. One of the two sets of auditing standards that we followed was generally accepted government auditing standards. It's in a separate document other than the financial statements. We'll see that Sharon gets it to you. Again, we call it the yellow book letter or the generally accepted government auditing standards letter. Those standards require us to report to you folks, those charged with governance, as it's called, any significant deficiencies or material weaknesses in internal controls that we may find during the test work that we perform. I can tell you that letter is also what we would call clean, meaning based on our audit work, we did not find any material weaknesses in internal control, nor did we notice any significant deficiencies in your internal control structure. Now, just to tell you a little bit more about the FY25 audit, and these are other types of communications that are required by generally accepted auditing standards. I try to boil it down as plain language as best as I can. Our audit of your financial statements went very well. What really that means is that when we came in here to begin our field work, we found the books and records to be in good working order. Cash, receivables, debt, payables, all of the key balance sheet accounts, if you will, where we found them to be reconciled on a regular and timely basis. And as a result of that, we did not need to propose any significant audit entries as a result of the procedures we performed in order for your statements to be fully in compliance with GAAP or generally accepted accounting principles. So, we are also required to disclose to you significant estimates that are in the financial statements. Some of the largest deal with your pension and OPEB liabilities and the related deferral and expense accounts. As well as the estimated allowance for uncollectible receivables are some of the key estimates that exist in there. Our professional standards also require that we disclose to you a non-audit service that we perform. We are your independent auditors. We must maintain that independence. We do perform for Reading like we do. If CBIZ audits 500 governments in New England, we perform this service for probably 498 of them, and that is we actually assisted the town in preparing the document, your basic financial statements. There are a couple of governments that prepare their own, but again, the auditing standards require that we significantly point this out to you and actually communicate it to you that it's referred to as a non-audit service. So in addition to the audit work we did this other non-audit work, which again we do. It's a service. It's done for almost every government inside of New England. You get outside of New England, it's a very different world out there where the governments actually prepare their own financial statements. I don't know why, but that's just the way it works.
That's probably because things are done by county outside.
That's a lot.
It's a bigger organization, whereas we're a little tiny.
Yeah. Some counties in Texas have about 10 CPAs on staff to prepare the financial statements and the like.
So it's my first meeting. So you audit our financial statements, but they also help you prepare them.
Putting it together, yeah.
So anything that changes, you're updating her and.
Oh yeah.
So at the end of the audit, Sharon is actually one of the more what I'll call involved reviewers of this.
mhm.
So what she does and what we do is we take what we have and how these figures actually make their way here from the town's unadjusted general ledger, and we prepare those schedules and send them to Sharon. And then there are various adjusting entries to go from what is called the UMIS basis of accounting, which is required that Massachusetts municipalities maintain their books on the UMIS basis,
Mhm.
and then getting that all the way up to GAAP. So the modified accrual basis adjustments and then the full accrual basis adjustments, which we'll talk about a little bit further. Sharon actually sits and reviews all of the adjustments, crosswalks them from the unadjusted balances, looks at them, reads the descriptions of the journal entries, and well, is not shy to ask questions if
Right.
she has them.
So those are entries that you recommend?
They're entries that we
Or-
prepare based on the town's supporting documentation to
Okay.
get to the accrual basis of accounting.
Yeah.
Yes, and modified accrual.
There's some entries that DOR doesn't want us to be posting on our general ledger because it messes up their free cash calculations and all of that.
Oh, okay, so there's kind of two sections.
So we give them all, yeah.
Okay.
Yeah, like we don't,
No, that's
the fixed asset entries and depreciation isn't done on the.
Pension, OPEB, all of those things are here, but the Commonwealth does not want you to book those on your side.
Interesting.
Another difference would be the ARPA money that you received. The state required Sharon and all of the other governments, when you received the cash, you brought it in, Sharon and her peers were instructed to bring it in as revenue when it was received. Generally accepted accounting principles say you don't earn that revenue until you do with it what you're supposed to do with it, which is spend it. So there was a UMIS to GAAP reconciling item. Sharon knows all about it, proves the entry. For all I know, and I don't know this, but she may have given us the entry. I don't exactly know off the top of his head. I don't. But those are just some of these.
Interesting.
That's an example of a difference between what DOR, Mass Department of Revenue, requires and GAAP.
Understood.
Thanks.
Maybe the last thing that I think, of the checklist that we all have with required communications deals with disagreements that exist between the firm and the town. And I'm very happy to report that there were no disagreements in how to apply generally accepted accounting principles between Sharon's office and our firm. So there were no disagreements in how to apply generally accepted accounting principles. So that's just a quick overview of sort of the required communications. The last thing I do want to address before Zach gets into some of the numbers is timing. We're here with the June 30, 2025 audit that got done either late July or maybe even been just last week. I'm sorry, I don't remember off the top of my head. So it's 13 months beyond your fiscal year end. I take responsibility for that. There's been some mergers and acquisitions in our industry and our firms in particular over the last couple of months, last couple of years, excuse me. And that's set us back a little bit. And as a result, we really didn't start even requesting information from Sharon, the town of Reading, until January of this calendar year. Most of the work was done and then concluded over the springtime and in the summertime. What I would like to say after just speaking about that is, and I mentioned this to Sharon earlier tonight when we brought Laura upstairs to introduce her in a one-on-one situation. What I think is different now and going forward than say August 10th of 2025 is the backlog of audit work that our firm had a year ago compared to where we are today. It's a night and day situation. We have only a tiny 2 or 3 items that are backlogged, where a year ago we probably had 30.
So Sharon has mentioned that to me a couple times, and do you think that industry wide, like firms are getting caught up, like you guys did?
I do. I think, and it's just this next part is just one person's opinion. I think some of it goes back to COVID,
Right.
where everything in this industry, meaning the governmental industry, things got delayed. They did, and it's taken a longer time to come back than in our firm does a lot of commercial auditing as well. They didn't really delay anything because of COVID. So there was not anything to come back from. And it's not just the firms that we've all been a part of. it's the governmental industry, as I talk with people in other states and even other areas of the country. I think that's where it started. I can only speak in terms of the industry, the public accounting industry as a whole. I can only speak to CBiz and where we sit today. And I'm so optimistic about the upcoming audit cycle for these folks, because again, if there's two or three little things on a backlog list, it's not 30 full audits.
No, that's great.
That where the backlog exists. I'm very excited for the team going forward. I really am. So I just wanted to, get that out there. You can ask me anything you want relative to that.
So I think it might be a related question, but I just want to delve into it just to make more. I don't want to dwell on it. But so the audit of 24. So what happened there? Was that part of it? Did we drop the ball on our side, or I know
As far as the lack of a meeting,
yeah. How was that also a delayed audit as a result of the same factors?
it was more delayed than this audit.
Okay.
As far as the fact that there wasn't a meeting like this, I really don't know.
Did the transition in town managers impact it? I mean, who arranges the audit? Is it your office or does the town manager
So,
get involved?
I would set up the audit committee meeting. The only thing I recall from the last audit was they had transitioned us to somebody different and that person left as the audit was being
Okay.
finalized, but it was late and then they were starting fiscal 25. So I think we just kind of rolled into getting
Right,
the
no, I
fiscal
didn't know because
25.
we had our
meeting.
own churn at the town and ended with a few.
Right.
Yeah.
Well, and also once it gets past a certain point, it sort of gets into a different cycle for the town. And I can imagine where maybe it gets pushed off the table, but still
Well,
minor concerning that we didn't have that meeting, but still
but also Reading Municipal Light had a change with the
Oh, they changed
see
fiscal year.
no, but the CFO that delayed their audit. So did that impact this at all?
No, I don't think so, because that audit was delayed calendar 24 and calendar 24 audit was significantly delayed
Yeah,
for the reasons you mentioned.
yeah.
And that's the one that got incorporated into your June 30, 25. The electric light has, as you all know, a calendar year end, and it's the period ended 6 months before the town's year end that gets incorporated in. So, I just speculating, probably shouldn't, but I think when the 24 audit got issued, as Sharon indicated, we were trying to move right into 25. I never thought about a potential audit committee meeting. As I mentioned before, I've said this to several of the boards I've worked with over the years. All I can say is, had there been issues that, in our professional opinion, needed to be brought to the committee's attention, I would have found a way to reach out to one member of the committee and make a meeting happen. That's our responsibility. To me, Sharon does it as a convenience, but it's our professional responsibility if there's something that really needs to be discussed. Before I get into, I spoke a little bit about this, but before I turn over to Zach, I'll just one more thing. Sharon has up on the screen our independent auditors report. This gives you our opinions, which, as I mentioned earlier, are a clean, or technically it's called an unmodified opinion. That you have a basis for opinion paragraph that tells you, as I mentioned, the auditing standards that we followed. We followed 2 out of the 3 sets that are out there. The third is for publicly traded corporations, so that doesn't apply to you. Page 2 and page 3, they tell you management's responsibilities, tells you our responsibilities. At the bottom of that page, you have required supplementary information. That includes things like your management's discussion and analysis, all sorts of pension and OPEB schedules, and for the most part, they're up to 10-year trends. Then you also have some supplementary information in your financial statements, which are the combining schedules. And there's also 2 pages in there that show a comparison fiscal 25 and fiscal 24 of your MD&A. So,
Sorry
with that,
to interject real quick, just because I'm not seeing it. I'm not sure if anybody else is not seeing it, but nothing's showing up on the Zoom screen. Sean, are you seeing it on the Zoom screen?
Oh, you
Yeah.
can hit the share button again.
Yeah, I can see the PDF.
Oh, yeah.
Okay, weird. All right, I'll figure it out on my side. Sorry.
Okay.
You can see it, but Tom can't.
I can just see
Let me
Sharon,
stop the
Sharon
share.
Engstrom, right? But nothing else, yeah.
Let me share it again. Let me just try and. Can you see that?
Now I can see it, yes.
Interesting.
That's weird.
Yeah,
Okay. Sorry about that. Thank you.
thank you. What Zach's gonna give is just an overview, and Sharon will go to the pages on the screen so everyone can see. But your financial statements are 140 pages long. We are not going to walk through them in a tremendous amount of
I know
detail.
we're looking.
We're gonna hit on the high points. Pension and OPEB on your long-term perspective financial statements, and fund balance accounts on your fund basis statements. So Zach, take it away, please.
Perfect. As Scott mentioned, I thought he ended the prior piece very well with recognizing the comparative statements for the general fund, and that's something that most municipalities don't present. However, the town does present general fund comparative statements. So Sharon, if you wouldn't mind turning to it's report 129. I think we're 3 off, so maybe 132.
132.
I believe so.
132 of the PDF.
Of PDF, correct.
Right.
Let me see if I can make
What
this
is it
bigger.
here? There's chairs right here. Okay.
So it says, yeah, it's 129. It says comparison balance sheet general.
Yes. All right. So if everyone's here, one of the key components and the first thing that folks look at, and folks being users, is in rating agencies, citizenry, should they look at them, and a lot of your financial advisors. And Sharon, if you wouldn't mind scrolling down for me just a little bit,
Sorry.
is the fund balance of the general fund. So the leftmost column is fiscal year 25, and in the second column, that middle column there, is fiscal year 24. So what you'll see is that the total fund balance of the general fund in fiscal 25 is $34.9 million versus $36.8 million in fiscal 24, change of about $1.8 million. The second component, and maybe most important component, is that unassigned fund balance number, which is just above that. And that is really what the town is able to essentially spend for the general operations, plus the amount of funds that is in the general stabilization account. And that changed by about $3 million from fiscal 25 to fiscal 24. Now, Sharon, if you wouldn't mind going up to page, it's page 18 on mine, so maybe 21 on yours.
Is that change? Okay, I'm gonna ask a very simplistic question.
Sure.
We hear from Sharon, like when we use free cash, oh, we have 3 million in regeneration. So if we use,
Oh, patient.
if we use 6 million in free cash, but 3 million of it was regeneration, is that why there's like 3 million left? Is a change in our
Yes.
perspective? Okay.
Yes.
And I'm
You-
really
you didn't-
oversimplifying.
You didn't generate the same,
Going
you
down.
generated less than you
You want me to
used.
start?
Right, and that's
13 on.
part of our ongoing.
Oh,
issue.
13?
Okay.
Sorry.
Well said.
So for a comparison, and scroll down just a little bit more for me, Sharon, the town presents, and this is in the management's discussion and analysis, but this is the last 5 years picture of the town's general fund balance and related activity. And what you'll see is, again, that unassigned fund balance number change. And there's, again, on that 5-year change, some of the stabilization fund increases, encumbrances, which are essentially budgetary balances for POs that are open, that expenditures will come in the subsequent period. But the table below, where we're talking about that unassigned fund balance and total fund balance, is what is really looked at from a percentage standpoint. And as you'll see, the unassigned fund balance represents about 17.81% of the general fund expenditures, and total fund balance representing 28%. Why those numbers are important is because the GFOA, the Government Finance Officers Association, generally recommends that 2 months of operating expenditures are available in unassigned fund balance. That's kind of the quote unquote gold standard. So it comes out to about 17%. So the town is still healthily inside of that, being at that 17.8% figure. And this is one of the reasons why the town has maintained and kept its AAA bond rating for a number of years.
So that actually looks like we were pretty much in line with our trend. The 2024 number seems like it was unusually high. Do we have any recollection of why that number went up so much back then?
There were very positive turnbacks in the general fund operating budget.
Yeah.
So for fiscal 24, so I just have some notes here. Revenues and transfers in exceeded budgeted by 4.6 million. Expenditures and transferred out exceeded by 2.2 million, and that was softened or utilized by or lessened by the use of free cash of about 5.2 million for general fund operations. Operations and capital. Now, fiscal 25, why we're seeing that number go down a bit is the increased use of free cash going from 5.2 to 5.6, and then turnbacks being a little bit lesser than what they had been previously. So you had
Turnbacks being unspent appropriations.
revenues exceeding budgeted, expenditures less than budgeted. Thank you, Scott. Revenue on the revenue side, it was to the good by 3.3 million, and then the expense side to the good by 833,000.
So Sharon, is this why when you told FinCom, when we're talking about FinCom has this 7% free cash level, but you're saying the raters want to see 15 to 20%? Is that 17 what's in the 15 to 20? And that's where you get the number from. Okay.
And this is at the end of 25, not counting the year that we just finished.
And
And
it's
it-
bad way.
we're going-
Now it's, how many communities really meet this 17% goal?
I don't know that number off the top of my
I
head,
mean, that's
but there's
it seems like it's a lot of money.
17% this is a very strong balance
Okay.
in terms of measuring against peers in other communities. And Scott, if you want to add a little context there.
If I could just add in context, I mean, I agree, it's a strong balance sheet. Only I might want to perfect in what Zach was saying is, I got the impression you were saying strong compared to your peers.
I guess I'm
And
just
I would
wondering
say,
that how many communities are able to meet this recommendation of the 2 months?
it's usually your peer communities, the
Peer
AAA rated
communities. So
communities.
other
usually meet
AAA
those.
rated communities?
Yes.
Okay.
And there's probably some that are AA that don't have any potential for new growth or some other reason that they meet the criteria for a all of the to being AAA rated except for 1 or 2. So they may still have 18%.
So it's got balance sheet accounts can be notoriously timing impact.
Yeah.
So this number, I'm sure, must fluctuate during the course of the year as tax collections and various things move around and whatnot.
Absolutely.
What is that range? So we say we're shooting for, let's say it's 17%. Is there a range over which that number bounces up and down to? What's the shock? What are the error bars on that number as it goes up and down during the course? Because you say 2 months, and obviously there's some logic around that, but hopefully it never gets down to the point where like, oh, we got a week of cash left.
You mean like
Odd-
before we
oddly-
collect our real estate taxes every quarter?
You mean in terms of cash flow?
Yeah, in terms of cash flow.
We tend to have very strong cash flow, so we're never
So
really
is
in a
it fairly
situation.
consistent, or are there like peaks and valleys?
The one thing I will say is that because we've become more reliant on the investment income, we used to get very little investment income. And since interest rates have gone up and inflation has gone up, we've needed to rely more heavily on investment income. Our treasurer is locking down some of our funds so that, she
So the-
keeps only so much available.
Investments, they might be like a
Like 6 months,
investment.
yeah.
So you-
And so she's looking to get higher returns by doing that. So she'll lock down at 4%.
So means that your cash flow might get.
Yeah, she maintains a cash management, a cash flow of what we need each month. And then she locks down as much as she can.
So what's the lowest you see that go to? You probably don't track it on a month-to-month basis.
I don't track
That's
them.
what I was just going to add, is that oddly enough, that percentage throughout the course of a fiscal year isn't tracked. It's not just the Reading.
No one does the math.
No one does the absolute math, because one, you are billing and collecting on a quarterly basis. That's provided, and most governments do, at least in the Commonwealth. But there's also sometimes there's timing with respect to expenditures. I mean, I don't know this, but a lot of towns, well, I do know that a lot of towns issue a lot of bonds in the month of July. So when they do that, it's because they don't want the first principal and interest payment, the principal payment to be 1 fiscal year out. So a lot of towns have a high debt service load, expenditure load at certain times of the year.
If you have big projects going on, you could amass the expenses.
Exactly. So it's not tracked, but the conversation that I was hearing is spot on. It may not be tracked, but it's all about the cash flow. So
It's more us tracking the cash flow, not necessarily a percentage.
one more thing, given where we are in the conversation of total fund balance and unassigned fund balance in the general fund, remind the committee, and again, I know there's some new members, they may not have heard this, and this, when I mentioned a few minutes ago, the difference between UMass accounting for ARPA money and GAAP accounting, this is another one of those differences. The Department of Revenue requires Sharon to track your stabilization accounts separate from the general fund.
Mhm.
So she does that.
Mhm.
But GAAP says they're really all one.
Yeah.
Because the money came from the general fund and it's just stuck over here in a savings account. And so the numbers you see up here in the 34.9 and include some of the stabilization accounts. Some of those stabilization accounts are committed for a particular purpose. That's the 639,537 up there. Some of your stabilization accounts are what is referred to as a general stabilization account. That's included in the unassigned fund balance of $21.9 million.
Okay. So is that the school special education?
So the committed stabilization funds would be the special ed
Yes.
stabilization
Oh, what did I
and
say?
the smart growth. Well, but I guess I thought you meant like what he was referring to, the general stabilization fund would be in the unassigned.
Are
Yeah,
revolving
the $2 million.
funds They're committed then because they can only be spent for a specific purpose.
Revolving accounts
From
are
the-
tracked separately from the
Right.
general fund. The
Okay.
general fund is just the operating fund of the town and these three stabilization accounts.
Okay.
Now, of the unassigned fund balance that Scott was alluding to, that 21.9 included in that is that there was $2 million, just over 2 million in the general stabilization.
Right. yeah.
So that number is included in there.
Yeah.
Smart growth had 10,000 that's on its way, kind of diminishing, and the special education stabilization fund had about $630,000
Do
in
you
it.
track?
We do, yes.
It's in a
Those are
separate section.
reported elsewhere in the financial statements,
Okay.
but we can certainly talk about some of that.
Yeah. It's bad. 10 years ago, the schools had a ton of money locked in.
Oh, yeah, like
They got spent down, but I remember it was around 2015. I don't think that's still the
it's
case.
been, yeah, I think it's
Not anymore. Yeah, not anymore.
So then that, because the smart growth is kind of like that, the only special purpose fund is really special education.
That's the significant driver.
Yeah,
That's
the
what's
smart
there.
smart growth is low balance right now.
Is it in there?
It
Or
is in there.
Oh, it is in there.
It's so
Okay.
in that committed for stabilization funds, it would be the total of what's in the sped stabilization and the smart.
So if we scroll, that's actually reported in these where those balances. I think it's on the next page, Sharon. But
There's one question before
Yes.
you get off this page. Is there anything to say about the assigned for subsequent years expenditure?
You were right in
That
front of me.
number-
You're right in front of me. So one of the things and one of the biggest differences, you'll see that the unassigned fund balance change of that 3.1, and you're going to look at that total fund balance of 1.8, and you might ask yourself what the difference between those figures are. Well, the assigned for subsequent years expenditures is one of the drivers there. You'll see that it was 3.63 in fiscal 25 and 4.6 in fiscal 24. What those are, and that is the use of free cash for next year. So
Right.
that's required by GAAP to be taken out of the unassigned fund balance, because what GAAP says is you already have those funds essentially parked to the side for.
For the year starting.
That's correct.
Yeah.
That's correct.
It's already been taken from free cash and put into this subsequent years
Okay.
expenditure.
So I'm stating the obvious, but you're seeing a clear uptick there. And from what I
Oh, yeah, and now it's gonna go.
what I
down to
heard
10.
this evening already
Keep
was
going.
that Sharon's been talking with you folks about this, but there's the evidence of it in the accounting.
Just looking at that column, yeah.
Thing even fiscal year's over or like mid fiscal year, like April, when you said, oh, we need another million for almost for snow, right? Like that.
Mhm.
I don't know how you reckon. Let's
So
go
that would
into
be-
this.
So
That-
it would fall under, so the $6 million that we would, or the 6.475 that we're using for fiscal 27 would have come out in April. And then if we were to come back in the following April, it would be taken out
But
free
I
cash
mean,
before.
The stuff that we needed also for fiscal year 26, the added stuff that you always ask for in town meeting, and it varies, right?
Mm.
There was a snow, that also has to get in too by June 30th.
Yeah,
And
so,
you-
but it will come out it depends on when we had, you have free cash certified to start the year. And at that time, when you're starting the year, the cash that you've already designated in that April, just prior to that year starting, has already been taken out for that free
Right.
cash. It's anything you do after that that's going to need to be deducted later because it's been certified as of the beginning of the year. So whatever you do in November, in April will come out
But
at the
it
end of
comes
the year.
out all at once. If you're saying, oh, we're gonna need 7 million and 6.5 million in free cash in FY 27, even though you don't need it, all of it, you take it all
I
out
have
of
to-
the
I have
beginning
to
so that
take
you
it
have
out,
to
yeah.
have it. Right, okay.
They want it out of the free cash number when I'm
Right,
going
so
for
no
it
one-
certified. They
no one
want it
goes and
reserved so they know
double
that
spends it.
I've already voted this money to be used, so it's really no longer part of my free cash.
So something could get approved and then come in under, right? Get approved at the town meeting, but then come in under what got approved. Would that whole number be in there?
That would typically result kind of at year end during the budget analysis when we
Yeah.
get into there as it shakes for fiscal year end. But so timing dependent.
Well, if I vote for
They
free,
would end up coming back into essentially free cash as unspent appropriations.
Exactly.
If Sharon's department was appropriated $100,000 for X, it only cost 90.
Regeneration, right?
Yeah.
Yes,
Sorry?
exactly. Regeneration is what they
Yes,
said.
yeah.
so if we vote at town meeting to use $1 million for snow and ice and I
The
don't,
Parker roof, right? So how would that have flown through?
That was debt that we issued on it, so that was gonna be my next
the roof
question.
is actually a capital
Oh.
projects fund. So that we had leftover money that we had borrowed and we were using,
Right, that's-
moving that around. That's a little different.
It got approved at town meeting.
At a certain moment, we had to use the debt for something, and
So what had happened was we had approved a debt authorization for Parker Roof at higher than what the project came in at. And so we had leftover borrowed
Right.
money that had to be moved to like-kind projects. They had to kind of qualify to be moved at town
will
meeting.
that happen with Killam, or with Killam's coming under, you just will take
Well,
smaller tranches?
If it does, it'll be smaller amounts because we traditionally just borrow once for most of our projects, but with a big project like Killam or Recal, we're doing it in tranches. And the plan is because we're looking for an override for fiscal 28, we're probably going to do a short-term borrowing and get closer to the end of the project before we do that permanent
All right,
borrowing. So
so-
there'll be less of that
Right,
excess.
because I think that it was coming in at 72 instead of 100 or something, so you're not gonna continue the newspaper article on it, and I'm not trying, want to tie this back to audit, like, does audit track these kinds of things? When we're borrowing for a project and it comes in under, and you're
Well-
in expected tranches of debt, do you track that too?
They're tracked in the capital projects, yeah.
Okay,
If this probably gets super technical, but I almost feel obliged. The audit looks at that, but the town is the one tracking that. And I feel like
Okay.
I'm stating the obvious, but
yeah,
I wanted to put this out there on the table that we've talked mostly about the general fund, and then we all pointed out the stabilization fund is here. Zach, only correct me if I'm wildly wrong, but there's probably 300 funds in Sharon's general ledger.
They all have their own balance sheet and income statement.
Exactly.
They're-
So it's not, yes, we're looking at all of those
but you're
funds.
looking at a bottom line, not the individual.
We're looking at things very individually as well. Yes.
They look
It's
at every
just
fund, yeah.
But my point is, we're not the ones that track it.
Okay.
The town tracks it, we audit it to make sure it's done in
You
accordance with
check it
generally
tracked
accepted.
correctly.
Right, right. And if there's a bond authorization for a school of $20 million and you issued one tranche of $10 million, we know that there's an authorization to spend out there of $20 million. I don't know if this happened, please forgive me, but if you spent 11, borrowed 10, spent 11, you kind of look like you have a short-term deficit. That's not necessarily problematic because the authorization is there to spend $20 million. But those are all things that we look at.
It is problematic when I'm getting my free cash right.
Yes,
They'll say you borrowed that money from the general fund, they'll take it,
Because in
they'll
the
take it.
past, we've been like, yep, whatever with the estimate came in, like, borrowing. And we're just,
Yeah.
Sharon's trying to be really, really like, careful. Thank you.
excellent point on that, Sharon and the committee member, but I was just trying to, more than anything, give you an illustration of roughly 300 funds and the types of activity that we see in there. Sharon, could you scroll down to just like the governmental funds balance sheet? for a moment, probably
Page
jump ahead about
21.
6 or 7
Page
pages.
21.
Page 21. Yeah, it's going to be
Um,
report page 18.
Just, this is your governmental funds balance sheet. Okay, we've talked a lot about the general fund. The ARPA fund has been major for a couple of years. It was decided to leave it as a major fund, and that's defined in the
Yeah, it
accounting.
goes away after 2025.
Yeah, then you've got that going left to right, non-major governmental funds. That is where, I'm speaking somewhat generically here, there's three major things in there. Your special revenue funds, your capital project funds, and your permanent funds. That's what's in there. And your special revenue funds are school grants, school revolving accounts, town revolving accounts, receipt reserve for appropriation, capital project funds are in there. So any bonds that were issued would be accounted for in a non-major fund, of which there might be, again, close to 300 of them. So each individual authorization is tracked separately. Each individual school grant is tracked separately. Permanent funds are like your perpetual cemetery, perpetual care, library, perpetual care.
So generally speaking, those are funds that we don't have access to. They've been designated. They're not something we can tap into except for those designated purposes.
If you scroll down, Sharon, just for a second, and honestly, this would I would only say this with Reading's audit committee. You'll notice that most of those fund balance amounts are non-spendable, restricted, or committed. There's some timing issues that create a small deficit. It's not problematic, but focus on the restricted and committed amounts. I mean, you go back to the definitions here. You talked about them being separate. They are a special revenue fund because the revenue is restricted or committed for a particular expenditure purpose. So that's why any residual or fund balance is shown in those classifications right there. You do not have access to it because if it's restricted, that means somebody else holds the cards on what you can spend that money for. The almost $19 million, it's detailed in the footnotes. That's probably, for the most part, it's unspent bond proceeds, and it's probably your circuit breaker over at the school, make up the lion's share of that $19 million. The committed amounts, a lot of that is probably some of the revolving accounts that again, it's committed for a particular purpose. It is not available to finance operations, if you will. I just wanted to add that because again, the focus has been predominantly on the general fund, but the conversation is a great conversation, but it's gone to some of these other funds. So I wanted you to have this illustration here that they're completely separate from the general fund. And by and large, they can't be accessed by the general fund.
Pause there for questions for a moment
Thank
to
you.
see if there's anything else.
No? Or would you like me to go?
For those who would like detailed information, we don't have to go through all of it, but the town does present combining statements for that large non-major governmental fund column. They're found on report page 133 and this page, probably 136 for 3 off still. So this is where you'll see some of the federal grants, state grants, revolving funds, receipts reserved for appropriation, gifts, donations, student activities. And if you scroll down to the next page, Sharon, you'll see town and school capital projects, and then trust funds. So those balances here that they're actually on the previous page, but this is the actual inflows of the revenues, expenditures. You'll see some of those proceeds where those debt issuances pertain to some school capital project funds there. That's where this detailed information lies. So for those who are curious about it, those do exist in town's financial statements. Okay, on to just moving from the fund basis financial statements, which is kind of that current resource flow method. We're going to go to the economic resource measurement focus. Sharon, if you wouldn't mind going to, I think it's going to be page 18. Perfect. And just scroll down for me.
I have used the phrase, I believe, with this committee in the past that, there's both a long-term perspective and a short-term perspective set of financial statements in here. And I know there was a joke about 2 sets of books. I've heard that when I talk
I
about
didn't say midnight.
long-term perspective and short-term perspective. There's measurement focus differences that, if you want me to talk about it, I can, but please don't ask me. But the long-term perspective, The long-term perspective that Zach's going to get into is really the focus is almost always on pension and OPEB. Sure, you've got your capital assets in there, you've got your bonds payable in there, but readers in general strictly focus on the net pension liability and the net OPEB liability and the related accounts. So
Scott took the words right out of my mouth. I learned from him for a reason. But the two numbers that I want to focus on here are the total net pension liability and net OPEB liability. So the net pension liability for the town as of fiscal year 25 was 51.8 million, and the net OPEB liability was 93.59 million. I do want to make it a point that the RMLD figures are in here. One of those items being the RMLD or the town's OPEB trust fund position. I do want to talk about that. That for just the town as of fiscal year 25 was 87.8 million. So again, some of these numbers are a little commingled here, but that is the town's net OPEB liability.
Can I see the top of this? I've lost track of the columns here. Oh, the
So-
governmental business, okay.
Yeah.
Yes.
And governmental
water
activities,
business.
governmental activities are essentially everything but your enterprise funds. The enterprise funds are the middle column.
So just to trend out a few of those figures, the total net pension liability in fiscal 24 was 53.2 million, and the total net OPEB liability was 72 million. Now, one of the big changes in that from going 72 to 93 was a new valuation for OPEB in fiscal 25. And what that was, and what they did is there are various assumption changes when you go through a new valuation. In fiscal 25, there were updates to mortality tables to bring them up to more current, as well as updates to the healthcare cost premiums to bring those to be more current. So as one can imagine, there's a significant impact when they're making those changes from 2 years ago to now. And that's really what showed there was about a $16 million move in the total pension liability attributable to these items. Significant drivers, again, being the healthcare costs, as I'm sure all of you folks know, those continue to rise and have been rising over the last few years. So that did impact this liability.
So is that all there? Is it all just the assumptions? There wasn't a change in our staffing that would have really driven that change or anything like that? It was really kind of outside factors.
The changes in actuarial assumptions were the largest drivers. Yes.
That just seems like a crazy huge swing considering they're supposed to. I would think they would have increases in healthcare baked into that. You have assumptions it's going to go up by 8 or 9% a year or something ridiculous, and they apparently were wrong.
I wouldn't say.
I wouldn't say
decided that assumptions were made. We're not conservative.
I think I don't have a specific answer to that, other than, we did audit the assumptions that the actuary used. There's some good disclosure.
Same actuary. We didn't change.
Legal is the actuary.
The same guys changed their mind.
It is not unusual for us to see changes in assumptions that are in the $16 million range. It is not, Reading's not the only place that we see that.
The liability is so big.
Now, one of those items, and with the changes of assumptions, while that amount impacts the total pension liability, that doesn't impact the total pension expense all at once, because there are deferred inflows and deferred outflows that where those are recognized, and they're essentially smoothed in over 5 years. Mm-hmm. And that's where, so while you're seeing it in this, net OPEB liability number as a larger chunk, if you would, there's also on the previous page a large deferred outflow of resources. And on this page, there's a deferred inflow of resources. Both of those relate to some of the movement between changes of assumptions to kind of smooth it in and bake it in over time.
So
with regard to the OPEB expense.
So that's the net liability. Did our contributions, I guess you probably need to look for contributions for
Our contributions for OPEB, because of our situation, have been lower than what they have been in the past.
Okay.
So we've never been able to fully fund the 30-year funding schedule for the general fund because it would be like $2 or $3 million. The goal was always to get to fully funding the pension and then redirect some of the funding that we have for savings from pension. But during the last few years where the budget has been extraordinarily tight, we've gone from 500,000 down to 300,000. And in prior years, you'd see us like have savings in health insurance and we would do 800,000.
Correct me if I'm wrong. I thought at one point we thought the pension liability was basically going to be fully funded. I thought we were talking like 30-31-ish.
This
Yeah.
32 is the current
It's about,
funding
yeah,
schedule.
it's 30,
It's pushed
32.
out a little bit.
Yeah.
And management
So it's
side.
sliding right. So at one point it was sliding left. Now it's
It
pushing
was-
back out again.
You know, we hope to get it.
It was supposed to be 2020. It started, it was 2028, then it was 2029. We tried to hold 2029 for as long as we could. But when you're closer to being fully funded and they improve your mortality table and we lower our discount rate and all that, it's millions of dollars now being spread over a shorter period. Like if you only got 4 or 5 years left until the hit is too much for us to take. A $200,000 or $300,000 hit to do those improvements to assumptions ends up being too much.
But the assumption that once it's fully funded, we'll have about 3 million a year, is that still good?
I think that it'll be a significant decrease in what we're paying for
Right.
pension. Yeah, I think it's at least, I think 3 million could potentially go back to the operating budget
Yeah.
and we'd be fully funding our schedule finally. The
Which
enterprise
schedule,
fund,
if I may?
the OPEB.
Okay, that's what I wanted.
So I would say that we have been fully funding RMLD, water, sewer, and stormwater. They're probably going to be paid off before we.
Yeah, RMLD is like way ahead.
They're much smaller. The majority of people work for the general
It
fund.
looks
And
like
so
the deferred outflows for OPEB is 1 point. This year was 1.2 and last year was 1.5. Are they really like putting in 3 times as much as we're able to put in?
where we
The
looking?
deferred inflows and outflows aren't necessarily one-to-one with just cash contribution. Yeah, so that's where we get into some of, in what makes up the deferred outflow. We can go into what exactly makes these up if you folks would like.
Oh, you're right.
These
There's-
disclosures are here.
Awesome.
And they're much
A little
smaller.
bit of a,
Yeah.
okay.
They're much smaller.
Sharon, may I?
Yeah.
Can I? Great conversation here. Sharon, would you be able to go to PDF page 127? And I'll let the committee take the conversation where you want to take it. But I would want to point out, and when the pension accounting standards came out and the OPEB accounting standards came out, it was essentially determined by the standard setters that there's the accounting treatment and the funding treatment. What we were just looking at is the accounting treatment. We want to talk about it? The 3 of us could talk about it all night long. My opinion,
Somewhat of a mythical number in a sense.
my opinion is people, what they really want to know is what should we be funding? And I remember this, I remember it well. I was doing an exit meeting with a board who asked me that question and I said, I don't have it at my fingertips. And I wasn't even sitting in my car and I said to myself, you idiot, it's in the required supplementary information.
Mhm.
I think one of the most important numbers about OPEB is in that 2025 column, the first number up from the bottom, contribution deficiency. The ADC, or the actuarially determined contribution of 8.6. I think I'm saying that number right. I'm having a hard time seeing it. And then the contributions in relation are 4.8, which means that in order for you to, if it's a 30-year funding schedule, and in order for you to be contributing, you need to contribute $3.8 million more per year in order to become fully funded. That at least is telling you your current shortfall.
Mhm,
And again,
mhm.
we could talk about the liability on the face of the balance sheet, the deferred inflows, deferred outflows. You can talk about that all night long. Pension does mature after you appropriate money for fiscal year 2032. I don't have the number. Sharon probably has it off the top of her head. There should be a significant savings from what you have to pay to the retirement system. What I think I heard Sharon say is some of it could go back to the general fund towards the tax rate or appropriations. Some of it could go towards this contribution deficiency.
Mhm.
To me, this is, when it comes to OPEB, this is the page that should be talked about. This is my opinion.
Is this contribution deficiency a forever thing as long as OPEB exists? I mean, you said it's, you say in the 3 million, instead of going back
So-
to general fund, it should go back to this. Is this always gonna be there?
So if you were to like, every 2 years, they do an actuary evaluation and they give you a 30-year funding schedule. And we have not been able to meet the general fund's annual required contribution. So every time they do this, they give us a new 30-year schedule because we haven't.
Kick the can down.
Yeah, we're kicking the can down the road. So once the pension is fully funded, we'd be redirecting and trying to fund whatever it tells us we need to pay for a 30-year schedule and start to make real progress towards.
But we don't
Where
have
they're
to,
going.
if we're in a position where you're still gonna lay off teachers and police, right? There's no.
Will it always be a 30-year schedule?
No, if you're doing the annual required, it'll start, you're gonna start to get closer to be fully funded. But because we can't even do what the 1 year is, the first year or the second year, they're going to give you a whole new schedule. They call it like an open schedule. But with the business ones, the water, sewer, and stormwater, you'll see if you look at their valuation schedule, they do become fully funded somewhere in like 2029 or 2030. So the smaller pieces we're getting there, we're just not getting there for the general fund, because consider the fact that our teachers are being covered under our OPEB benefits. So even though Mass Teachers covers their pension, we're covering their benefits. So the general fund is the biggest piece of the pie when it comes to benefits, because all the teachers land there, even people who aren't in our pension system like Mass Teachers, we do cover the benefits.
And Sharon, correct me if I'm wrong, you said that this is not hurting our AAA bond rating.
It's not, because we've always done something. You know, there are some communities that haven't been as disciplined. As long as I've been here, we've always put something into to funding this. It's not mandated, and we've always put like 500,000 at least every year. And then in years where we had savings in health insurance, if there was extra 300,000, we'd be putting 800,000. Not in recent years, it's gone the other way. We've kind of had to go away from the 5 and more towards the 300,000, but we still have the discipline of still making sure something goes in there from the general fund. And so that's viewed very positively, especially where, you know, others aren't funding at that level.
So, one question before we get off this topic completely. The current post-employment benefits that are being paid to employees, is that also simultaneously coming out of the fund? So where?
No, it's being paid out of the general fund, but they are included in kind of the annual contribution.
So we're paying for now and we're paying for the future.
Mhm. So you really kind of have to be putting away for the retirement of the people who are actively working now. Like, and so that's kind of factored in for their retirement for the future.
And we have clients who deal with that in their own unique ways. For example, I had a client who said for every new health insurance or new hire, we're going to contribute an additional, $2,000 to the OPEB contribution. Just something that can kind of be measured to say here you are. Or we have other clients who have policies that say after our unfunded actuarial liabilities done on the pension side, we're going to redirect at least X percent of that saving to the OPEB
How much
contribution.
are we paying right now for post-employee benefits unrelated to the pension fund?
So it would be included in what was paid here, that $4.8 million.
Okay.
Maybe 300,000 of it probably was, or 500,000 of that would have been going into the OPEB fund. So
The rest of
different,
it's actually covering.
yeah, it's actually us paying.
Annual yearly liability.
Yeah, from the general fund. Yeah.
So do we have any liability for employees who leave and might go to another town? When you tap them?
It used to be that we used to, I think that at one point there was something going on where we would have to almost like pension. If I were to go to another community and retire from their community, but I've worked here 15 years, Reading would have to pay a portion of my pension. And for a few years there, we were paying other communities for the benefits, and then they stopped. It was just so confusing. So it really ends up being, at this point, I think, wherever you work when you retire, they're the ones who have to pick up your benefits, which doesn't seem right to me, but that's the way it works.
Seems like we should own it.
But the funny thing is like, it seems like
All right.
it seems like the pension side, we have like about people coming in and going out. Like, it's not like a big loss for us, like in terms of the pension side, where you bill out to other communities that owe you for retirement on people who retired from Reading that worked with them, and vice versa. Those kind of net out very, very closely to practically nothing. But it would be a similar sort of thing. But when they tried to execute it, I know we were sending out, and it just didn't. just so many cities and towns were not equipped to track this, and so they stopped it. But we were paying for a period of time our share of
And with
people's
the- and
benefits.
I think it's with the teachers too, it's related to the average a few years ago.
Yeah.
Because people like, I remember seeing years ago, the Joshua Eaton principal, she became assistant superintendent for like 1 or 2 years. And I remember somebody who worked in the school system, she was just doing that to fund her pension. Like people who get to these promotions right before they retire.
Yeah,
Their pension.
they do like anti-spiking stuff, but if it's a promotion that
Yeah.
puts you there,
not
I think you're still fine.
Not the contribution.
Yeah. No, I didn't know.
Like very.
Yeah, a lot of times people will do that at the last, they'll take a higher role to get their numbers up.
Yeah.
Who was the person?
The woman? Eleanor? Oh, time ago.
I've been here, I'm on my 15th year, so it might have been predating me, depending on who it was. I've seen a lot of principals come.
Wait, the whole series of people.
I mean, our assistant, we're going in the role for like a year and a half. I mean,
Who was that?
One
No, I
I
don't.
was only, she was here like when my kids were in kindergarten, but I would just remember seeing a lot of high school principals. Eleanor Friedman, Kevin Higginbottom.
That name sounds familiar.
I think it's just.
And it's an abnormality to not have OPEB in the Commonwealth, yes.
Interesting.
I don't know if there's any thought to change
The thing
that,
is,
but
no,
it was not well
there's
executed
nothing
when it was.
Nobody's talking about making OPEB mandatory. I mean, that was like this threat. No one at the state is there like.
But it just
working on
keeps getting
offense
bigger,
stuff.
like, so you want to start funding it.
You should be asking, hunky dory, is there anything that you'd say if I were you, I'd be asking about this. You guys as auditors, you know it better. What should we be asking?
This is on OPEB.
On anything, anything in this document, like where should we be I mean, we have limited time, where should we be
Yeah.
keeping our eyes focused?
I think you keep your eyes focused on the amount of free cash used for operations compared to what's being regenerated.
All right, now we're all on.
Yeah.
Microphone.
And I think you keep an eye on OPEB.
Okay.
And I think, I'm sort of overstepping where I probably should. But I'll continue this thought, which is a lot of governments are doing what I've heard discussed tonight, which is when your payment to the retirement system matures in a few fiscal years, taking some or all, but that's not my call, and putting it towards that 3.8. This is exactly why I came to this page in the very back, because it's probably more important. Sorry, Zach, it's probably more important for this group to hear this than about the actual liability itself.
You're saying that to do that, and then there's people who are counting on, we're talking about an override, let's make the override last by taking that 3 million and.
We just have to weigh, yeah.
Well, it doesn't have to be all or nothing.
Yeah,
So,
it could be split. So the advantage of putting it towards this is just to save us money on future 30-year clocks and everything. I'm oversimplifying, but.
Well, I also think it would continue to,
Everything compounds, so it's gonna help us.
oh yeah, if you start putting in a couple of,
Making them happy.
looking at one number on the screen, 3.8, you start doing that for a couple of years, that ADC, the actuarially determined contribution, is gonna drop.
Yeah. I mean, that's good for the town, but then the average citizens just see, this isn't benefiting us, these people that have.
What I will
worked here
say-
20 years,
Everybody has to be fully funded for pension by 2040. So I don't think it's far away for them to say, okay, now you're all fully funded for pension. Now we're going to mandate the OPEB, and then the number's huge. And
Yeah.
so you want to be ahead of that, because I can't imagine that isn't far behind. If everybody gets fully funded for pension, they're going to start focusing on, okay, now let's make it mandated to fund the benefits.
Yeah, I think it's just a general frustration of citizens to be paying for things that they're not, these future.
Oh, I know.
That aren't even working for the town anymore, like,
They have schools for someone else's kids.
No, I know, I'm saying it's just that because,
Well, you're
Really?
paying today for a liability that could be 20 years.
The savings will manifest.
Just a lot, like.
Downwards.
But also too, something to note is that people in retirement, and we've been very proactive about it, is when people turn 65, we try and get them onto Medicare. And if they haven't paid their quarters, if they're late, we will pay the premiums to get them on Medicare. So that makes it much more, it's advantageous to both the town and to the retiree because those benefits become less expensive. They're not on our Blue Cross Blue Shield regular
Right.
PPO or HMO plan. They're on a supplemental plan, which is a lot less expensive.
Yeah.
So you have to look at it that way too. We're doing everything we can to make Medicare their primary after age 65, and then they've got a supplemental plan that's a lot more cost effective for us and for the retirees. So in retirement, it's a less expensive plan.
Yeah, no, I know we have to do it.
But
I
that's
think it's
but
just
it's helpful to
explaining
know
to the
that
public,
too, because when we
understanding.
decided to do that, take on those premiums and take on any penalties that people were going to have to get onto Medicare, we saved so much money. I think that next valuation, $10 million came down from our liability just by doing the Medicare piece. So we're trying to pull every trigger we can to keep
And
it.
honestly, for some people, the Medicare might be better benefits than the
Oh, for
high
sure.
deductible health plans or
Yeah,
whatever we're
yeah.
offering. And,
Mhm.
So Sharon, are there any other areas like that, like Medicare, that there is opportunities for saving?
We're always looking for things. We just negotiated with our property and casualty to bring down because we saw double-digit growth for many, many years in property and casualty, and then we pushed back hard and got some good savings this year. So
So
and then when we did the
reminding
PEC, we sat with the PEC for a 3-year agreement, and benefits are
Yeah.
something that have to be bargained with the unions. And they all came to the table looking to do the same thing we were doing, save money. And so it worked out that we had like savings about $3 million over the next 3 years in health insurance. So, and it could actually, and we have deductibles now that we didn't have before, and things that will definitely bring things costs down for us. So
So those plans. Never mind the overall cost of healthcare, but the plans and the structure of those plans are not fixed over time, that we're dialing and
it
adjusting.
used to be every year we do an agreement for the health insurance with the Public Employee Commission.
Yeah.
Or committee. And then when Bob left, he had done a 3-year agreement just to make it easier on the next town manager. And then this year they asked us for a 3-year agreement. And because we did a lot of changes. We added a deductible. We did a lot of changes that we hadn't looked at before. I mean, significant changes that caused a lot of savings for us. But still, they say to you, still budget a 10% increase, even though we brought the numbers down. 10% up from that still is a number that I don't want to see, because a Prop 2.5 budget cannot endure a lot of double-digit growth.
Yeah, that's coming from someplace.
Yeah, so even though we got the numbers down, that if we don't, we want them to stay in a place where we can manage them, 3%, 4%, 5% even, but 10%, 14% like we saw last year, not manageable.
So when I was asking about what to focus on, I guess, I don't know if I was getting ahead on the agenda of audit areas of specific emphasis for fiscal year 26. I don't want to like rush past the audit results, but I was trying to think of that too, like, okay, we gotta focus on free cash and focus on OPEB. I don't know if the finance committee should change any of our policies or recommendations based on these trends, but.
We do have an OPEB funding policy. We could definitely look at that and see if
So
there's
that
anything
maybe
you want to make a
that's just
change.
future
That was
agenda topic,
after
but
we
not
had
next
the
season.
override in 2018 passed. That's when we finally kind of adopted that policy. We'd always kind of had it in writing, but FinCom had hesitated to tie themselves to it until they got the override passed. When they did that, we did put a policy in place. It'd be worth looking at.
I was gonna say, we talked about it when DLS came out, it could be beefed up, it's like a one-liner, it could be like under these circumstances, which is like in practice what we do anyway, we can't afford it, we make it down this year, when would we put it up? When would we
More
put it down?
discipline could be built into it. Yeah.
Those types of policies when it comes to funding, and again, I'll be overstepping my role, but I would just share my experiences. Those types of policies are very well received by rating agencies.
Yeah, S&P always
Having
comments
a
that they
policy is
appreciate that we
good.
have them.
That's a good, and I mean, they.
And they always comment that we pay our debt
Don't worry.
quickly and that they appreciate that, but that's not something they see a lot.
So, Marianne touched on it, either this, so we didn't meet last year, so you guys didn't really have any specific guidance, for 24 and maybe 25, did you guys have any areas that you delved into? Oftentimes we'd have you look at, cash for extracurriculars or ambulance or the police station parking, the dump, whatever. Were there any areas that were received special deep dive?
I'm gonna look to Zach, I don't recall, but
So
he might.
Absent the, kind of what we discussed here in the directive there, one of the things, and Sharon will remember this, that we did a deep dive on.
can't
just
remember
kind
what
of some of the user access, IT
Okay.
roles,
Oh, yes.
and roles and responsibilities, who had access to certain things. And by and large, we just went through a dive to see who had the ability to look at X in the general ledger, and then really assess and say, is that an appropriate
Put the active
yeah.
directory and figure out.
So after Sharon and I spent some time going through that activity, and it was just it's a good act to go through to see, oh my gosh, that person actually has this turned on, and maybe they shouldn't. And Sharon and I, kind of walked through and went through
They
some of
probably don't
those.
even know they have access, but let's take
Yes.
that away.
Yes. And we didn't recognize any instances of that person doing anything that they shouldn't have. And I would say all in all, from a standpoint, things looked pretty good. There were just some improvements that could have been made, and we, with Sharon and our
Definitely
recommendations,
looked at them.
made some adjustments there.
Any policy adjustments based on those observations or just?
I think that a lot of the updates that Munis does sometimes will introduce new options that click on that you have to click off, like in terms of like,
Mhm.
I don't know. And then you're just like, oh, I didn't realize that even was a thing. We're looking at people's permissions a little bit more deeply, and
How many different systems do you guys work on here?
Munis is the primary financial
Okay.
software, although the police department and fire department have a software that they keep track of their stuff, and then it imports into Munis. I think it's Vector is the new software. They just changed over. I think it was in January of last year. Prior to that, they had Microsystems, a very old DOS-based looking thing.
Looking great.
Karen, nobody's had their hand, I'm just looking up, like Sean and Tom, you haven't had your hands up because the view of you is like kind of.
Sorry, I moved them away so
All
it could
right,
be-
just making sure if
Yeah.
you guys didn't have any questions, because we're doing all this here.
Yeah, Mary, I did have my hand up for a minute, but I took it down. I think you
I'm
kind of.
sorry, that's why I'm
No, it's
checking,
okay.
because
It's okay.
I
I
couldn't
think we
see
kind of
it.
self-corrected, but I do think we were running pretty far afield from audit results there, talking about sort of future financial strategies, which are probably more appropriate for a FinCom meeting. But I think we kind of self-corrected there.
Yeah.
Yeah, I was kind of just thinking of the number 3 on our agenda, which is audit areas of a specific focus, so I guess, do we have more things we should discuss on the financial
Right,
results?
traditionally, in fact, some years we've had a little list. of
Yes.
Boxes and like, we haven't looked at this since 1997 or something like that.
For context, Marianne, what we do historically and what this committee has come to is we say, all right, where have we been? Where should we go look at some of the, whether it be cash handling policies, let's see, and go out to that department and really do a deeper dive on how the building department, what do their receipts look like? Are they following, yes, school cafeteria or various different things, fire department, who's collecting, maybe some police details or DPW, town clerk's office, things like that. And that was where, absent that, we did the IT side of things. So usually in this item, is there anything that the committee wants us to do, or any departments that you want us to visit to say, let's go check on the procedures for this? I know building, I think, was done in fiscal 23. Police and fire done a couple years before then, but we're talking fiscal 23. So anything's kind of fair.
It's usually for this cash mostly.
And that's typically when we ask, Sharon during the audit process too, is, have you noticed any unusual turnovers from departments or a lack thereof? And do we need to go out there? So I'll kick it over to kind of you. And I know you and Diane were hand in hand in really understanding some of that to see if there's been any issues that you've noted or any.
No, I mean, so much is being done electronically now too. Like some of the payments are being done through Invoice Cloud and OpenGov, so you're seeing less and less cash.
Mm.
So it makes it even less to look at.
Mhm.
Because we are offering ways for people to pay, electronically, which is better for fraud purposes. We're not seeing the loss of the cash. Somebody stealing the cash is the biggest risk that you have when you're handling cash. So I'm trying to think of an area where
There's a lot of angst at the Pleasant Street Center because a lot of seniors still want.
they
to
were
pay
not
cash.
happy. There's because we did not want to accept cash at the senior center for
We were
programs.
dealing with even huge amounts.
No.
No,
Already
they $5 a class, but
But I don't know how much that they were even dealing with, they weren't running short, but it wasn't,
You
the
make
whole of it was probably
that
less than
way.
$2,000.
I think when they were, no, just like, they have it on electronic online. They'd have a computer there for them to do it, but they didn't want to use a debit card or whatever to, or they could directly debit their account, set up their routing number and all that. But a lot of them just want to pay cash. And so, but cash is where we're vulnerable. When a lot of cash starts laying around, that's where we're really not comfortable.
Cash is the name.
And we don't have enough staff to really have the segregation of duties that would entail. And so we opted for no, and they're not quite happy with that. We try and do as minimal cash as possible.
What we're hearing is that other communities have not stepped up to that for this population, you know, so it's not consistent.
I was once asked about the cash at the Council of Aging, and I'm like, my answer was very simply, you know, you have to evaluate whether or not the cost to put in the controls is worth the risk.
How much-
And
what's the
because the
materiality?
amount of cash in this particular government was not worth the time to have the conversation. But so
And it just
I
makes you
understand
feel
it's a risk, and
vulnerable,
should
yeah.
something go wrong, it's embarrassing and what have you. But every control has to be worth the cost.
Mhm.
We just don't have the staffing to do it the way that they want it done. So that's why we said no. When we need to be able to keep track of the cash and have firm control over it.
Right, yeah, and then you need to send somebody out and they've got to collect it and somebody's got to.
We gotta audit it and all the stuff.
Sign off on it, deposit it, I've been there.
Was that the only area of our government where it's just, you know, $5 being like?
There's such minimal cash
Lots
now.
of stuff is shifted over, so the school lunches are all cash. Right.
Mhm, mhm.
I know one of the things we looked at in the past, exactly, but the sporting events cash was not too, because that was one of the areas.
We had them look at
They
that.
might take.
Probably haven't done town clerk in, it's been at least, I know I did it with probably 5 years, I'd say.
It's probably been 5 years. I mean, that's one place where I could see somebody come in to pay a dog license. They'd probably take cash
Mhm.
at the counter there, but like, there's plenty of staff there to keep that monitored, but I don't know. At the senior center, there's just not enough people that work over there. And then we would have to go over there and audit the cash and make sure they're turning over on a regular basis and all the stuff.
And they were getting so much for free with ARPA over.
Well, and they're just really generally upset because they're paying for things that ARPA provided for free. So they're
Right.
just generally not happy about that. But then when I say to them, I really don't want to be accepting cash, it's a vulnerability that we don't have the staffing to cover. But
Do we have a tap and go credit card thing?
Mhm.
That's still no.
they have some sort of a online program that they're using, and there's a
Okay.
And we don't have parking, everything to the extent, we're not charging for parking. I know we had kiosks, but they have fell apart.
yeah, they're not
And then-
using that.
But then, no.
They're using some sort of
For
app
parking,
or
and
something.
we have a parking app, that's all electronic.
That's all electronic.
Yeah, I know there was kiosks.
I don't think the kiosks are in
They're not
function.
They're not functioning, so there's no.
So there's very few places where I see large volumes of cash. The only place I could say that there's cash that still gets collected is maybe the town clerk and the collector's office would sometimes get cash. Maybe the building permits. We did building permits just recently,
Once the
though.
building permits was done a few years ago.
But
Um,
more and more of that is being done through OpenGov and electronically. So it's
And
not
those open things, you know, I assume you get a report, you tie it to the deposit. In the
we
bank.
import it to the financials. Yeah,
Is there anything to even look at? Is there something to look at there? Everything's.
you can always, there's always something.
Subject to scrutiny. Theoretically, that should be like just a box checking exercise to say, pull a couple reports, look at a couple deposits. What did they say they got? Yeah.
Mhm. And those are some of the procedures that we're looking at as we looked at kind of the collector's office and treasury in aggregate,
Mhm.
is to say, you know, how did this, and it's the daily cash out, Sharon, I know you've heard me say that a million times, but we look at how a day's work got into the general ledger, how that made its way to the bank statement, do those elements reconcile, are proper controls in place?
Right.
That's just part of our general audit procedures.
Is there any worth or value in reviewing or maybe helping review current procedures that maybe haven't been looked at real recently, where the fundamental process has kind of changed, like we've gone away from cash in certain years. We've changed the process and sort of, because procedures, I know they are, you put a lot of effort into them, everybody gets someone, get a big book, and then you put them aside, and 10 years later, you're like, we're not doing this anymore. Is there any value in looking at something like that? Or is that kind of being maintained on a regular basis?
So we just
I'm just
recently.
searching for ideas.
We just recently had DOR come out to help us like look, kind of gave us a presentation on policies and updating your policies.
Okay.
We haven't gotten started on making those changes, but we have a lot of what they say you should have for a municipality. But we haven't looked at them, all of them, and gone through them and made updates to them. And so that process, they actually help you for free,
Yeah.
and they had some templates and all of that. And so if it wasn't for the override, we'd probably be very much engulfed in that right now because that was just a couple months ago. So that is something that I would love to have them do once we're done with it, to see if they think what we come up with for our changes for policies and procedures are sufficient, or if there are any recommendations, or maybe even during that process while we're trying to update them. Are there any areas that you would change in this policy before we adopt?
Yeah, you want to be proactive, say, come up with your draft and say, here, take a look at it and see if you can, have recommendations.
Because they went over a whole host of policies and procedures that maybe aren't always written down at every community that should be in place. And we have most of the policies they spoke of, just not a timeline where we review it regularly, And so we wanted to look at now, like you said, things are done differently. Are our policies aligned and procedures aligned to actually make sure that there isn't a waste that we could be defrauded using,
Yeah.
the new.
Or
the new-
sometimes, something that no one ever would have dreamed of before is now, we didn't say you can't do this, but if you did this today, that would really be bad.
Mhm.
because
Yeah.
The system has changed.
So
And
it's just definitely taking a deep dive into what do we have written down for policy and procedures, and are they still effective in the environment that that's where we're at. That's not complete yet. I would rather see them do that either as we're doing it, make recommendations, or after we're done. Are they satisfied with our policies and procedures after we get to that process?
So an area that's a huge budget issue that it's not a fraud issue, but it might be a process, has been overtime in town. We've had to have voted town meetings to increase, not a fraud issue, just.
Yeah.
So I think procedurally, we might have an issue there, because that is, I don't know, it's not just the police, it's the fire, it's probably other areas that a lot of people in town don't know. Is that something that you guys could look at, like process? Are we not billing enough? Are there?
I kind
I
of
think
missed.
that probably, what's that?
I wasn't sure of the question, so.
Well, there's the expense, but there's also a revenue opportunity.
Right.
And we talked about correcting the revenue opportunity, but I'm not sure. Have we quantified all of that? Is somebody looking into that, or, what are we doing? And
Yeah, there was a period there where we were charging, and I think the story we got at the last
Oh, for the
meeting was
police
that,
detail?
like, police details, and when Fidel was here, he was like, oh, no, we're gonna have it covered.
And
And then we did, we found it
we found it at,
well,
yeah, at town meeting on the,
after the
Concept,
fact.
after the fact.
concept of, historically speaking, of taking a deep dive into the area was really, focused on the cash receipt, custody, turnover. What you're talking about sounds like a very interesting exercise, but it probably, it really goes beyond the scope of
Policy.
What they're
of
looking
the
at.
audit. And sure, we can take a deep dive into an area each year. You're talking about what probably is a standalone project by itself.
Itself, yeah. But I will say that Jane has already put the kibosh on, like, the details being paid for by the general fund, that they all have to be paid by whoever's ordering it. Because even for the town, if we're doing a project and there's a police detail, they bill us for the project. So I don't know. I mean, he was mostly doing, like, when they did things on the common, the police detail would be covered by the town. Now it's whoever's running that event has to get so she's kind of put a kibosh on whatever Fidel put in place that was,
so we permanently increased though their budget for that.
no,
It's under discussions and she's slashing. She's trying to slash. She's working with the chief. And they already took those actions, right? Those
But wasn't
community
the
events are not
FY
being shared.
The FY 27 that included the increase, didn't it?
FY 27, they had an increase, but still, I think you're thinking of fiscal 28 where they asked for more
Yeah, we
overtime.
had to go back for.
And so when we were talking to them about their needs for overtime, that was only a part of the problem, was that they were told to cover community events and not charge anybody for them. That was only part of it, and they said a small piece of it. I think that they still had issue because they felt like we weren't increasing their overtime at the same rate of what the people's pay is being increased. So for instance, there was some sort of a grievance where if a position was open at lieutenant, can anybody fill that for overtime, and some grievance that we lost.
I remember that.
Yeah, and so it ended up being that, yeah, it has to be somebody in that same grouping, lieutenants or upper, and that those overtime, filling a lieutenant's position when they're out has to be filled by somebody at that level. It makes the overtime more expensive. So there's a lot of different things like that in play. Not to mention, over the years, there's state mandate on all these public safety trainings that we have to do, but the state doesn't give you any funding to do it. So there's a couple different things that are driving up our overtime, other than that issue that was mentioned at town meeting. And so, yeah,
So
it's
other than
generally a problem.
police and fire, are there other overtime within the town?
Very little,
Detail.
very little. I
Like
mean,
road work and stuff like that.
yeah, I mean, DPW would have some, a lot of their overtime is like snow and ice, which gets charged the snow and ice budget. But for the most part, police and fire are the big overtime areas. Most administrative departments, if they have overtime, it's a very small number. It's minuscule, nothing. But it became an issue because we've got so much state mandated training for police and fire that they have to do. And so they're bringing them in for overtime to do this training. And then when they're down staff, they're always down staff in the fire department. I feel like because we do advanced life support and EMTs as our firefighters, they're almost always getting injured because they're carrying stretchers. Like the injuries a lot of times that people are out on are because they are not just firefighters, but they're EMTs, and they're injured doing that sort of job. And when they're down staff, the overtime, they're paying that person who's out, and then they're paying an overtime shift for all. So with the more people you have out on injury, the bigger the problem becomes. So it happens on both sides, but in fire a lot more frequently. And sometimes we have them awaiting disability retirement because their injuries are that sufficient that they can actually get a disability retirement, but you're paying them until they get their approval, and then so it's really kind of a difficult situation. You're paying two people for the same shift in a lot of situations.
Can I ask, just to go in a completely different direction? I had made notes before this and trying to understand. You have notes in here about investment policies related to credit risk, where, if I'm understanding it, it's related to where we invest things and what risks we're taking, what we're investing in. Like if we put all our money in one thing and then it fails and we don't get it. Is that normal? Is it okay that we don't have policies related to, like, for example, put no more than 10% of the town funds in any one issue or something like that?
I do believe we have investment policies,
Yeah.
but they may not be ones that FinCom has adopted necessarily.
Okay.
There's some things that are state mandated of the treasurer in terms of the investment, the prudent investment rule, and all of the things where it kind of guides what she can and can't do with the municipal funds and where it can be invested. And if an investment is rated a certain level or lower, we're not allowed to invest in it.
Okay, so there's,
Those are the kinds of things, do you guys review that sort of stuff? That's kind of getting in the weeds a little bit, but do you look at the way how we're doing certain things versus state guidance or rules associated with that? It gets a little outside of pure accounting and more into, I don't know. Compliance, yes.
So we do touch on compliance in the financial statement audit. I mentioned earlier the Yellow Book report,
Mhm.
or the GAG, as generally accepted government auditing standards. In there, it's kind of a two-part report. The first part is internal controls, so significant deficiencies and material weaknesses. I mentioned earlier that there weren't any. The other part of that report is a report on compliance with laws and regulations.
Okay.
That is part of, we don't look at compliance with every law that's out there. Just like we don't look at every transaction that goes through Reading's books and records.
So it's sort of a sample.
It's a sample basis. And I didn't mention this earlier, I should have. That report also did not disclose any instances of non-compliance that are required to be reported.
So could we talk a little bit about something that came up a little bit earlier? You guys do RMLD, their audit, and you do us, and then we have, getting back to Burbank, we have, it's $1 million operation, and I have some general questions because they get audited, and their accounting firm and their auditing firm are the same. It's Tonneson and Company. But we talked a little bit about it earlier, how you guys have this multi-dimensional relationship with us, so maybe that's okay, but we've been told in the past that there's no capital plan. Like there's like just things that operation doesn't do. And we do have the ability to either work with them to make suggestions and have their preferred auditing firm do it at their expense, or for $1 million operation, we have the option and at least to ask you guys to do it, to help us out. It's never been done. And they do,
Hey, Karen,
had some.
Karen, I'm sorry. I don't see how this is either relevant to our posted agenda or even within the purview of the
It's
audit committee.
under discussion on audit areas of specific emphasis for FY26.
The audit committee's purview is financial statements issued by the town. The Burbank financial statements are not issued by the town. They're not part of our purview. I mean, it's part of your purview on the select board for sure, but it's not part of the audit committee's purview, as I see. I mean, somebody can tell me I'm wrong, but I agree with you on some of the merits of what you're saying. I don't think it's appropriate for this meeting.
So let's talk about it.
We audit RMLD, we audit the town. Well, we don't do the audit. We work with the auditors who do RMLD. We work with the auditors who do the town.
We do not. It's not under our purview.
I don't know if you understand the skating rink is owned by the town. It's leased to the committee. Is that where
It's leased to we're a landlord.
okay? Where
It's leased to whom?
it's
Okay,
leased
sorry.
by the town
To a 501c.
to a 501c who runs that. And the concept there is that they run it, they maintain it, and they have a non-mandatory but sort of anticipated voluntary payment that they make to the town in the form of rent. They make contributions to the town, but they are responsible for maintaining that facility and running all aspects of that facility to the benefit of ultimately to the town.
They have a
So it is
10-year lease, it has specific provisions, but again, and Mr. Wise, you were also trying to say something after Sean.
I was echoing Sean's point. It's not under the purview of this committee.
So
Right, so
I'm not, so let's have that discussion because
I think it would be something you could bring up with Finance Committee, because Finance Committee could order an audit of Burbank if they wanted to.
I thought we could only order parts of the town.
No,
I know that-
it's in the lease that the town can request to have the books.
But somebody
reviewed.
has to be able to pay for it. I don't think it's part of this particular audit.
No, this.
They have an independent audit all the time.
Yeah,
Yeah.
the town gets audited financials of the Brink and Authority, so I'm not sure what.
If there was
what you
some
want.
concern about it, you could order, like when we had like the issues with RMLD and the trucks, we had an independent audit done in
Just
both the
make
town and RMLD and
operation
our
of-
practices.
there is no capital plan.
I just think
There's-
the starting point ought to be, well, let's look at the audit that they have, not in this meeting. And start and say, what does that audit say, and do we need another one? But again, that's not in this meeting, so.
I think it would probably be more under FinCom's purview to order if you were thinking that was needed, like an independent. audit.
Not on the 19th, we can have that as an agenda item to discuss. I can note that.
The only reason I would say FinCom is because they had to order the audit when we had the problem with RMLD with
Okay.
the trucks. We had done an independent audit of our procurement practices on RMLD side and on the town side. And we didn't have Melanson do it at the time. We had hired a different firm because I think but I mean, that's the only other time since I've been here that we've ever done anything like that, just to make sure everything was on the up and up. And it was called by FinCom.
Well, if that organization was under the control of the town, it would certainly be, we would say, oh,
but it's
Well,
not.
as we go through this, we would say, well, you would audit their cash, or you would audit maybe the operations of that or a particular organization. So long as the town, we do have the ability, we have the right
We do,
to
yeah.
give these, to ask them those questions. To run that through FinCom that's fine. I wouldn't.
Yeah, I mean, it's not to say we don't, I just don't, because this is a 501c and that's audited separately and we have the right to do that. I don't know it's part of this particular audit. But I do think that if there's concerns, you certainly can discuss.
Sure. So coming out of the shade of what we've done this entire evening, were there any other areas so we talked about maybe like a policy, sort of a review or using them as sort of an assist to help you with the.
We could, as I'm going through that process, I could
Yeah.
reach out to them and
Yeah.
get suggestions. Yeah. You know, because I'm sure they see more policies than I ever want to see for different towns and so they could potentially give us advice.
Some policy. We always find a lot
Yeah.
easier to steal something.
Well, that's what DOR gives you.
Yeah.
Too. They give you
Blank.
templates of what these policies are supposed to look like and the sort of thing
I will
that should be
say,
in them.
Laid out.
During my review of other towns' financial policies, if I do see something over here that's really good, I will absolutely go.
Awesome.
Put this over here. So Sharon,
Well, when we
the
were-
general stabilization fund, you keep your eye on.
When we were doing our fund balance policy, when we were doing that with FinCom, I think that we asked our auditors to give us some suggestions of what others they have seen that had a policy in place, what they had done, just to not have to start from, scratch, to get some ideas of how other communities our size were approaching that task and that policy. Yeah, I mean, to try and like pick the best of what we've seen, what's already been done. Sometimes you do have to start from scratch, or nothing that you see is applicable to you. But
So it doesn't sound like we have particular areas of focus for the town.
I mean, the only thing I was thinking is the town clerk, because that's
Yeah,
where,
it's a-
people come in and they pay a dog fee,
The
they pay
cash-
for marriage license. I think we take accept that.
town clerk. Sure.
Yeah, I mean, it's been at least, I mean, I'm just running out of places where we're seeing a lot more.
Yeah,
cash.
we're not.
Which is actually a good thing. It makes me feel more secure, but yeah. That's what we've left it at, and, the treasurer's saying no cash.
Or yep, I'm sorry, parking passes as well.
Those are online.
All of it's online.
It's all online.
So the-
And even-
Well, DPW can go.
DPW does collect for compost stickers, so that's another potential area. I mean, I
I think
don't-
those are online.
No, it's.
Really?
you can run.
they're online, mostly online, but they still do. They used to be the same sticker and they used to be sold over at Dispatch. Now there's the compost stickers sold at DPW. And the parking stickers sold but a lot of it is done online, but I don't know that they're excluded altogether.
People that then get.
Oh, okay, thank you.
Yep, so DPW would be another one. I don't imagine that that's only a certain, yeah, it's $25 each, and it's like during the time, like a certain time frame that they're selling those compost stickers. You're not seeing those sold in the winter time as much.
No, but you can't drop off your Christmas trees unless you get a sticker, so they
Yeah.
are selling them in January.
I wouldn't have thought of that. Yeah, that's
That's the best time to get. That's
Really?
because they're calendar based, right? So you want to buy them in January. Yeah.
So maybe that's another area, but we're seeing more and more people that, don't carry cash, and they generally want an option that's electronic pay.
They get set up though sometimes with the online, with the fees that get, if they're already here and they can do something. they go,
Oh, for sure, when there's fees. I mean, I feel like if you do a lot of them where it's a direct debit to their account
Yeah.
online,
But
that
the
they
clerk
did
is-
lesser.
Mail it in.
That's why I think the clerk might be the one that sees more cash for smaller things. They do the dog licenses and marriage licenses and all that stuff, whatever else they're charging
They
for
get
there.
checks.
Oh,
Yeah,
the
they do.
compost sticker's only $15 if you're 65. So
Oh, is it?
it came up. I was like, yes, apparently it is. I did not know.
I mean, I wouldn't mind either one of those DPW.
There's more cash probably coming.
I thought you bought them at the
You
police
think
station,
so?
but-
20, it's 50, but it's most people paying 25. There's a lot of stickers.
So is it just the parking and the parking pass is only online? Because
The parking pass for the police department, they didn't want to accept cash. I
Yeah.
thought that was the one that
I
went
don't know what
over
that one's
online.
done.
okay.
That's
That-
done at the, it's done by the admins at the police department.
They're still doing that.
The parking pass is
Yeah.
under their
Yeah.
purview. No.
You can't go there.
You can go there, but I think they will mail it to you if you do it online, or you can,
No, but
they
if you
even
go-
have a,
If you go to the police station,
Yeah.
do they take cash?
I don't think so. That was one of the arguments that they had about dispatch doing it, is they might be taking cash now I think about
At
it.
the fire department, because I just had a fee schedule on the town website, and there's all these permits for alcohol hand cleaner storage, $25, energy storage, $25, gunpowder, $25. Tank.
This is the fire department? They have
Yes.
all these,
Nursing home quarterly
Smoke.
inspection, $40. I don't know how people are paying. Municipal fire
I
alarm.
doubt it's.
a lot of
Yeah.
the parking passes are going through OpenGov. That's what I'm seeing. But I don't know that they don't accept cash. But one of the big factors that they had for dispatch used to collect for the parking passes is that when they went up to $150, that was a lot of
Yeah.
cash, and they did not want to be
Yeah.
turning over every day. Like, we have policies of, if you're collecting more than certain amount of cash, you need to turn it over to the collector, within a certain time frame, within a day. They didn't have the time to be doing that, and they didn't want to have that much cash on hand. So when that sticker price went up, there was a lot of discussion that they did not want to be accepting any cash. So when they brought it upstairs to the admin, it's possible they're taking some cash, but I'm seeing a larger volume of it coming through open.
But that parking pass, you don't have to be a Reading resident for. Because it's the train to park down at the train.
No, I think you
You
have
do.
to be a
You
You
resident.
just pay daily if it's in.
No, I thought they had two rates. They had a more expensive, well, MBTA has the daily rate. but I
Yeah,
don't
only
think they-
residents get stickers.
Yeah.
You have to be,
The park-
they're checking and verifying that
Yeah.
you are a Reading resident. You can't buy one unless you're.
But you might be able to park on a daily. Oh, yes.
No,
cash
that's
only.
the- I think-
That's the
I think
MBTA.
those-
I mean, they may really, well, they've got to show a residence in Reading, so that if they're defrauding us and telling us,
Big sticker for down at the train.
yes,
Now, how does, now, the new trash pickup, DPW is gonna be getting when people have to close, like, $33 for drop off at garage, 65, like this mattress, but also to put a tag.
or are
on
you
it.
saying like to drop off those things? Yeah.
But if they don't get them at Market Basket, $15, they're getting them at Town Hall, so.
Most of what I heard is that we were going to have grocery stores like Stop and Shop and Market Basket selling them, and we asked them to only pay us. They are collecting the fee, and then they're turning it over to us by
I
electronic.
thought people could get them at Town Hall, and again, that's somewhere, someone's putting small. amounts
I
of
can
cash
find out. I
back.
don't think that
So I
that's
think
the
it's
case.
DPW.
DPW, that's where you can get.
I mean, most communities, they make it a Market Basket. Like, I'm in my community, I can't go to City Hall and buy I have to go
Yeah,
to Market
that's not
Basket to buy the
convenient.
orange dry.
Huh?
Huh? So if you have more trash than can fill up the container that we give you, no, you have to go to Market Basket and buy these, our bags are orange. I don't know what color they are in Reading. And you have to, so that they'll collect that extra trash. Just-
Throw.
Yeah.
Yeah.
So it's basically you're paying because you're throwing away more trash than can go into the receptacle that you.
Yes, people might, DPW and get $15.
Mhm. But if Market Basket is collecting cash for that, that's fine. They're paying us electronic payment. So,
Well, if people want an extra barrel, they go down to,
But that's $200.
yeah.
a year.
but they could pay cash to get that,
So
right?
I
Yeah,
guess
you that's the question.
I feel like I mean, DPW possibly is, but I would say the trend has been closer to people not wanting to have to carry cash in. Most people don't carry cash, and so they want an electronic payment method. I would still think that the payment methods are largely electronic.
And part of what we're going to do is, I wrote down DPW and scribbled out town clerk, but one of the things that we're going to do as part of this is come back and tell you guys, what they are collecting some cash for. And here's,
Okay, here are your actual, it turns out these guys switched over and they're not accepting.
And Diane's going to have some context on that as well.
Diane would know better than I.
Yes, Diane. So if it comes down that Diane says no, DPW has no cash coming in. Also, nothing is trash related. Everything is online. That's the only way to get a permit, what have you. Sharon, I'm sure you can send an email out to this committee and say, this is what's happening. perhaps we go town clerk,
Yeah,
whatever.
we can
whichever
switch it up
direction.
if I discover that.
We can be flexible here.
But I am seeing that all of those departments, including the police department, it's all OpenGov. I'm seeing the majority of it coming through OpenGov, which is all electronic.
Unless you're not getting the cash, which is.
Well, yeah, that's not to say I'm not the one they turn it over to. They're turning it over to the collector. So I'm not the one who sees the cash. If they are accepting it.
The revenue there. We can use the.
What?
We need an ATM right outside the clerk's office. Get the cash, get the $3.
I feel like you see less and less ATMs, like all my bank ATMs, like that are,
Nobody uses cash.
nobody uses cash anymore. Like, I'm like, there are 2 ATMs near my house and they're gone. I'm like, where'd the ATMs? If you should need cash, you're lucky to find a place to get it.
They still have cash in the collection box at that church, that people do electronically, the things like that, you know,
Mhm.
that's their.
Even church wants you to, just do it electronically every week,
Yeah. Well, then I think, so we've got our audit areas for emphasis. I think we reviewed the financial statements.
You have to have a vote to accept the audit.
Okay. I guess I just want to be sure between folks online and here that we are done with our questions on the audit, or do you feel there's any important thing you want to present about the audit that we haven't discussed? Because we kind of had you trail off in lots of directions along the line.
I'm good.
We covered the required communications before we started getting into
Yeah,
the
because
numbers.
you know it would be like online. I'm sorry, did I hear voices there?
I was just saying I'm good. I was answering your question.
Thank you.
I'm good as well.
Motion, you want a motion?
Yeah, sure.
Motion to accept the FY24 and FY25 audit results and financial statements as presented?
Second,
Second, Mark beat me to it.
I will take a vote. I'll start with online. Mr. Wise,
Yes.
Mr. Brandt,
Yes.
I'll be all formal here. Ms. Herrick,
Yes.
Mr. Herrick,
Yes.
Mr. Zarrow,
yes,
and Mary Ann, yes. That's
motion to adjourn.
Second.
okay. I'll start in the room.
Yes.
Yes, Mr. Herrick.
Yes.
Mr. Zarrow,
Yes.
Yes.
Mr. Wise, Mr. Brandt.
Yes.
Mary Ann, yes.
Yes.
Okay, we are adjourned.
Nice.
Great.
Where you off to, Scott?
Good night.
Someone good now? In a month?
Thank you all.
I know it's long, but I
Back
only
to-
once every